Today I would like to go through one of my trades. So this is a Swedish company called Axfood. They sell food. I found that by using relative strength on the sectors and finding the strongest stock in one of those sectors, and this happened to be one of those. And I came into this stock around this area here. The first thing that caught my attention was this great move up, and it's coming from a base that is a accumulation area, obviously, since we broke out of it. And we also have a low volume node right here. That is an area where the price does not like to linger, basically. So we gapped through that area and then we retested it as support. So that's an additional confluence with this top right here. So at this point, we're starting to get a channel going down. And I'm thinking maybe we can get this channel into this low volume node here. This bar here is catching my attention a lot because it's a bearish bar, but on a pretty narrow spread compared to the volume. You can see that it has huge volume, much higher volume than this bar, which achieved a lot more for less volume than this bar. So this is absorption. And I know that there are buyers in this bar because with all this volume, we were not able to push the price down that much. So that's very interesting. That's the first sign that there are big buyers entering into this stock again. But we don't get, and we also don't get a lot of bearish follow through. Having said that, we come up and nothing happens, no buying. So we get these bars where it tries to go down, up and down a little bit, and then suddenly we get this bar, which is obviously quite bearish. We achieve a lot. We break below all of these bars with this bar, and it's on increased volume. So it's looking pretty grim at this point. But then we start to get pretty bad follow through on this bear bar for the bears, and we even get a tight trading range. And volume is really dropping off in that trading range. So now it's starting to look a bit tasty to buy into this, hoping that we at least get a move to the top of the trading range. So we break below that, unfortunately, on very high volume, and it looks grim for the buyers again. But we are in the low volume node, so that's interesting, and we actually get a very good gap up and buy bar right after that, omitting all the negativity, closing above all of these bars, this tight trading range right here. So at this point, I'm thinking I want to buy. The bears are not that strong after all. And one thing you should remember is that within a trading range or a downsloping channel like this, you can get some big bars without it meaning too much. So it moves. Unfortunately, so I'm thinking right now that, okay, we have all this volume, so all these participants fighting over dominance here. So we could still get more volatility. So I didn't buy the close, I didn't buy above. I put a limit order a bit into this bar and trying to get in at a slightly better price inside of the value area of the channel. So this middle line here denotes the midpoint of the channel, and below that is the value area of the channel. So that's where I want to buy. I want to buy at good prices, not high prices. I want to buy closer to support rather than closer to resistance. So the next bar is a huge disappointment where we pretty much omit the entire bullish bar at slightly less volume. But then, lucky for me, we get a couple of narrow spread bars on low volume, indicating that the selling might be actually done. So I'm thinking that this bar and this move up here was a spring to this low. And we just touched the channel and demand line, and we were protected by the low volume node. So that's why I entered this trade. So I actually wrote here buy 50% just below the close. I ended up buying the full position, but spring plus massive absorption followed by a local breakout could get some more downside due to the elevated volumes of trying to get in lower. Relative strength breakout could spring the trend line, but should only enter the low volume node momentarily. So let's talk about the RS first. We can see that this top here had this much strength in it compared to the index. And then here, we actually broke that top. So we are more bullish down here than we were back here, basically. So that's a good sign for the relative strength compared to the market. What else did I write? Yeah, so could spring the trend line, but should only enter the low volume node momentarily. So this is the low volume node. And that's why I put my hard stop quite a bit below the low volume node, because I expected volatility after this huge volume. And I have my soft stop right here. So the soft stop is just a line that the price shouldn't close below, or my trade would not, it would no longer be a good spring. So I might exit manually if it closes below that. And it saves me some of the risk usually by having that approach. And also I am protected from some wicking going into the low volume node and possibly slightly below it, maybe retesting this high, who knows. So that's why I'm putting it down, the hard stop down here. Now we start to move up. This was a good bar, still within trading within these two bars, so nothing to write home about, but constructive at least. And then we get a smaller spread bar here, which is still bullish, still within these two bars here. And then the bears are trying to pull back by going below the previous bar, but we do so on lower volume. But at this point, we have what I call a technical rally, which is, it looks good on the price action, but it's not followed up by volume. So I'm thinking that maybe we'll have an interaction with the trend line and go down again. So I sold half my position here. And that turned out to be a misjudgment on my part. The trade actually went higher, but who could have known that actually? So I don't blame myself too much for that. So we get another good breakout, and now we're actually breaking above this high here and this high here, but not by much. When you get breakouts, I prefer to have breakouts that where 50% of the spread is above the breakout point, and this is not a great breakout, so we should expect downside soon at least. But it turns out to be quite a good little rally, but we are not able to compete with this high yet, and we see that we are supported by good volume, and then we get high volume and no progress. So we're definitely starting to interact, and we've been going up for quite some time now, so maybe it's time to move down. We're starting to go into this zone here where this bar here is, so I'll talk about that a bit later. So we start to move down here, we're in a pullback again, and volume is dropping off, so that looks really good. And then we get this really strange bar here, and that happens to be on earnings. So probably earnings came out, some evaluations were made, some people were shaken out of this trade, and then they reevaluated the earnings, and they think that it's good again, and it gaps up and starts to move higher again. And it does so on higher volume, and then we get a tight trading range. At this point, after this hammer bar, I'm putting in a stop buy order above this bar, and I get filled on the next day on the low of that bar. It's not a particularly exciting bar, and we get a few days in creating a tight trading range. And then we break out on good volume from that range, bad follow through, and we start continuing to move higher. We continue to move higher on higher volume, and then we start to stall again. Lot of volume, no progress, less volume, very little progress. A low volume breakout of this point, and then we get this higher volume bear bar that actually breaks below the breakout bar. So now I'm thinking that this is a fake breakout, or an upthrust, as we call it in Wyckoff methodology. And I also have, let's see what I wrote here. We need more data. Momentum loss at high volume resistance. Bullish outside bar is confusing. Trading range question mark. So what do I mean by high volume resistance? Well, you look at this bar over here. This is part of this high here. And you can see the huge volume that came in. So that are actually a lot of buying inside of this bar. It tried to go down, couldn't go down, but it closes a bear bar. So there were a lot of sellers and buyers in this bar. So obviously the sellers became very happy after this bar, but the buyers were not happy. There are still buyers in this bar that are trying to mitigate out with a at break even or so. So that's why we need, Wyckoff says that we need an equal or higher amount of volume to break through a resistance or support level. So because of all the buying that occurred in this bar, that's why we expect a reaction to it when we come back to it again. And you can see if I draw a trend line on this bar here, and I draw a trend line on this bar here, you can see that these volumes are nothing compared to the volumes on that bar. So in order to flush out these buyers, we would have to go into this zone and get them to sell their positions, which is what's happening now. And once we come down a little bit, again, new buyers might step in, and we might get a breakout the second time, or maybe even the third time on that position. It depends. We'll see. We have to monitor it bar by bar. But what I'm hoping for right now, because I sold here 50% of my position, and I'm not going to let it go through the low that started this move. So this is what I call a major low, and you could argue that this is the major low, but I want to keep my profits, so I put them up here, but I'm not going to let it close below that line. So that's where I keep in my soft stop for now. Another thing to note is that when I put in my long position tool, I always put in the length of what I think the trade will take in time. So I have suspected, or I'm anticipating that I'll be in this trade for at least 30 bars. I might not. As you can see in this trade, I did an exit, and in this one, I haven't exited fully yet. I might buy more, but it's a signal to myself and my head that I am going to be in this trade for more than just a couple of bars. So it helps me to stay in the trades. All right, if you see anything that you think I could have improved on, that I missed, please do tell me in the comments, and maybe we can learn together. Thanks. Bye.